I have to say it's wonderful to be here, and it's exciting to see how excited everybody is to see one another at this wonderful dinner. My name is Lisa Abramowitz. I'm the co-host of Bloomberg Surveillance on this 50th anniversary of FIASI. I remember trying to explain the concept of money to my oldest son when he was 6. I began with the barter system, where a shoemaker, for example, would give a farmer a pair of shoes in return for, say, half a cow. As society got more complicated, I explained, it needed a tool to more easily settle who is owed what, rather than just, say, bringing over 45 pairs of shoes or 8 cows. But it turns out that's not the real origin of money. It's always been about debt, people owing things to each other and the social obligations that come with that. That's why we're here today, to celebrate the power of both debt instruments that we analyze and trade and track every day, but also the social obligations that connect us. Because at the end of the day, understanding fixed income securities can be seen as understanding the health of a company and a country. It all comes down to, are we able to pay our debts to one another or not? Right now, we're at the crossroads of a profound change in our financial system. Developed market countries owe more than ever before. Inflation is no longer irrelevant. And companies are grappling with uneven economies. Large swaths of society are doing great, others not so much. Lay on top of this a generational change in technology, and it's all rather confusing. And we didn't even mention the fact that we're not really getting any data out of the government. Each of the honorees here today fell in love with the rigor and discipline of studying fixed income and the ability to strip out emotion to discern some truth. And each of today's honorees have taken that rigor and discipline to heart in their personal lives. They both continue to follow the discipline of markets, welcoming all opposing views and data, challenging commonly held beliefs. But they also all give back in myriad ways, from mentoring colleagues to donating time and money to causes that are important to them. I'm humbled to be here today. There are so many wonderful people and faces in this audience, and I really want the honorees to speak for themselves. So first up, I want to introduce the first honoree, who is Greg Davis. Greg Davis grew up in a military family in Germany, so it's no wonder he loves order and structure. And yes, he still knows German. Greg has witnessed dramatic financial transformations during his 26 years at Vanguard. He has seen bond markets move from over the phone to electronic systems. Investing has gone from individual stock and bond picking to index funds, with Greg learning from and working alongside Ken Volpert, who grew Vanguard's trademark index strategies. Greg was reminded again and again of the importance of risk management with the 2007 and 2008 period, which we all talk about and every single honoree mentions, really serving as a formidable lesson and guidepost. Greg has risen to become the president and chief investment officer at Vanguard and is a board member at the Investment Company Institute, an investor advisory committee on the financial markets for the New York Fed. He is devoted to his family, and Greg also serves as chairman of the board of trustees for the Children's Hospital of Philadelphia. Please welcome Greg to the stage.
Good evening, good evening. Thank you, Lisa, for the very, very kind introduction, and a big thank you to the Fixed Income Analyst Society for this tremendous honor. To be inducted into the Hall of Fame alongside such an accomplished cohort is deeply, deeply humbling. Congratulations to my fellow honorees. 30 plus years ago, I had just graduated college and I was working in the insurance industry. As Lisa said, I grew up in a military family, lived in a blue-collar town of Willingboro, New Jersey. For those not familiar with southern New Jersey, it was exit 5 off the turnpike. Delivering newspapers, cutting lawns, shoveling snow, and working in various fast food restaurants over my time. I was the first person in my family to go to college. And if you told me that I'd be standing here one day, I would have laughed. The next thing I would have asked you is, what is fixed income? My background, combined with being an African American, would not have pointed me in this direction, but I'm proud to be here. I'm proud to say that I've built a career at a firm I deeply respect, doing work that I love in a field that has challenged me both intellectually and professionally. And I had the good fortune 26 years ago to be hired by Ken Volpert. Ken is the true fixed income Hall of Famer. He built Vanguard's bond indexing team from the ground up, hired some of the brightest minds in the industry, and took a chance on somebody like me. Ken brought me on as a fixed income trader to trade governments and mortgages, and I immediately loved it. It's a space where math and economics come together, where discipline and logic are essential. But we all know fixed income is truly a team sport. He taught me how bond portfolios are managed, with a keen focus on risk management. In addition, I had the privilege of learning the importance of developing talent and creating an environment where that talent could ultimately flourish. Ken created that environment for me and his team, and I tried to replicate that as I grew my career. These lessons were critical in actually helping Vanguard's fixed income business grow from under $100 billion when I first started to over $2.5 trillion over 25 years. And that kind of growth doesn't happen by accident. It's the result of a shared commitment to our clients and constantly striving for excellence. While I'm really proud of the results that we produce for our clients, the growth that we've achieved, the path that the Vanguard Fixed Income Group is on, but what I'm most proud of, without question, is the people. The most important part of my job is doing what Ken did for others and for me, and that's mentoring folks and developing people. So meeting with our junior crew and seeing them develop, and our more senior folks as well, developing them as they go along. But watching those individuals grow, take on new challenges, and become leaders in their own right has been one of the most rewarding parts of my career. There's something deeply fulfilling about seeing someone that you've worked with find their voice, sharpen their skills, and then turn around and invest in others. That is how real impact happens, not just through fund performance, but through people. My hope is that those I've mentored will continue the cycle, developing and empowering the next generation of investment leaders, because in the end, our legacy, again, isn't about portfolios. It's about the people that we lifted, the careers we've shaped, and the values that we've passed on. And those values have impact beyond fixed income. As an example, I have the privilege of being on the board of the Children's Hospital of Philadelphia, one of the world's leading pediatric hospitals. It's a place where science meets compassion, and a place where miracles happen every single day. A place where a child born with blindness saw her very first firefly. A place where conjoined twins were separated to live a normal life. That is unbelievably amazing and humbling moments that happen at CHOP. But being close to that type of work has given me perspective. It's reminded me that the work that we do, while is really important in terms of helping people save for retirement, to fund their children's education, to buy their first home, but it's not life and death like what happens at CHOP. It gives you real world life perspective. And that understanding has not only made me a better investor, it's made me a better leader. And as I look ahead, I'm deeply optimistic about the future of fixed income. Yes, the landscape is evolving, the environment is more dynamic, markets are more complex, and investors' needs are more nuanced. But with change comes opportunity. The next generation of leaders is stepping up with fresh perspectives, deeper data fluency, and a renewed focus on helping long-term investors achieve their outcomes. And the reality is the talent that I've seen over the last 25 years, the talent is the strongest now that I've ever seen. And much of that talent is coming into fixed income. And we all know in this room, fixed income is the building block of the entire capital markets. Its functioning and valuation is the key driver of all other capital markets. It starts with us. How loans are priced, how mortgages get made, and how equities, to my equity colleagues, I have a few from Vanguard who are here, how equities get valued. We are the bedrock of how the entire market works. Not bad for us bond nerds. There are many people who helped me get to this moment, but first and foremost, I want to thank my wife, Jamie. We've been on this journey since sophomore year in college. Last week, we celebrated 31 years of marriage. We are the proud parents of two children, a son who's a senior at USC out in Los Angeles, and our daughter who's on the gymnastics team at the University of Michigan, who's a sophomore. I cannot say without hesitation that none of this would have been possible without their support and unwavering belief in me. But I also want to recognize my Vanguard colleagues. If you could just stand for a quick moment. I know there's a number of you, and I'm going to embarrass you, so if you can just stand up for a quick second. We're not going anywhere. I'm here because of you guys. This is really a team sport. I've had the privilege of playing and coaching along some of the most talented, thoughtful, and dedicated professionals in the business. You've challenged me, You've inspired me. You've made me better every single day. And Ken, without you, none of this would have been possible. You laid the foundation for what has become one of the most respected fixed income franchises in the world. And to you, Tim, thank you for providing my family and I an opportunity to lead the investment team in Australia, to come back to lead the fixed income team, and ultimately becoming CIO. Without your support and advocacy, that would have never, ever have happened. And Salim, I look forward to building on all the momentum that we've established over the last year, and as we continue to bring more capabilities to more clients around the globe. And thank you to FIASI for this tremendous honor, for recognizing the work of so many, and for allowing me to share in this moment with the people who made it possible. I've spent my career surrounded by brilliant minds in this industry, and to be recognized in this way is something I'll carry with me for the rest of my life. So thank you for that.
Got to make sure it's the right Greg, right? Thank you.
Very much.
I don't know where you are. There you go. Here, yours.
Thank you.
That was awesome. Since sophomore year in high school, huh? It's impressive. Our next guest, the next honoree, is Mark Howard, who is an expert in volatility of all sorts, which comes in handy, especially at a time like this, although it's not really showing up, certainly in fixed income volatility, but I digress. There have been all sorts of volatility regimes over the past 39 years, and Mark has been studying almost every asset class throughout it all as an equity analyst, credit researcher, bank analyst, and more. Of course, fixed income is the most important because that is what makes the world go round, obviously, and I'm not speaking to a biased crowd. He discovered his love of numbers and logic from playing board games with his grandmother. He learned forward vision as a hockey player, skate to the puck, not where it is currently. Mark is currently a multi-asset strategist at BNP Paribas, and previously headed global research at Barclays. He spent almost 20 years at Lehman Brothers as a senior global strategist, has been recognized numerous times by the institutional investor, sits on tons of boards, as every single honoree seems to do this, which is just mind-boggling. Where do you guys find all the time? He sits on the board at the Friends of the Institut des Hautes Études Scientifiques and the Maine Community Foundation. A former multi-year president of FIASI, I'd like to present Mark Howard. Mark.
Je ne sais quoi. C'est incroyable. Well, thank you, Lisa, for that most gracious of introductions. I've always appreciated your journalistic rigor and distinctive wit, and tonight is no exception. And thanks to all of you for honoring us with your presence at tonight's celebration. It is truly heartwarming to see so many familiar faces. I'd like to start by acknowledging the care and vetting done by the Hall of Fame Nominating Committee and the trust and support shown by the FIASI Board of Directors for this most special recognition. That board was led by Aaron Lyons and then Jess Broughton most recently over the last year, and supported by FIASI's longtime executive director, Lauren Nauser. Special shout out to my wife Marion and children Millie and Jack, as well as our special friends and colleagues at my table. Your presence makes tonight especially memorable for me. In the event brochure, I placed a half-page advert that refers to the bosses, colleagues, clients, vendors, professors, coaches, friends and family members who took some pretty raw material and molded it to become a very long-tenured sell-side analyst and prognosticator. It has been the combination of my curiosity to analyze and predict outcomes with my desire to assist clients that's fueled a very long and satisfying career on the street. I truly love that every day is new, it's different, it's confounding, it's demanding, and it's because of this my work is almost always fun, so I love to come to work because it's always fun. But only part of my good fortune came from nature. My first boss, Joan Blissert Burns, took a chance on a B student from a small liberal arts college and taught me accounting. True fact, I got a C- in accounting in college. Those T's and everything, it just didn't work. And she taught me accounting and how to rip apart financial statements. Hall of Famer Glenn Reynolds taught me how to thoroughly analyze industries, companies, capital structures, and covenants. Great trading partners like Rick Reeder and Russ Brownback coached on relative valuation, market technicals, and sentiment drivers. And the late, great Jack Malvey inspired and instructed in so many ways, particularly around portfolio theory, the relevance of investment benchmarks, and how to engage clients strategically. My big bosses during the first 2 decades, Martha Dumont, who's here with us tonight, Bart McDade, and Ravi Matu, instilled the importance of teamwork, developing others, incorporating empirical rigor, and emphasizing ethical behavior. At Barclays, Tommy Kalaris, Grant Kvalheim, and Bob Diamond gave me wings and a mandate to truly integrate a global sell-side research offering, from equity derivatives to subprime ABS and everything in between, employing qualitative as well as quantitative methods and carefully embracing public media, thanks Lisa, to amplify the message and build the brand. For the last 15 years at BNP Paribas, I've benefited from the stability of a massive global institution, a strategic vision that emphasizes growth, innovation, sustainability, our clients, and conduct in markets, and the very strong support of leaders like Olivier Osti, John Gallo, and Joe Malley. And they've enabled me to help the bank connect and engage with some of our business's most dynamic CIOs, like JP Morgan's Bob Michael, Point72's Mo Grima, and GSAM's Assis Shah. I feel most fortunate for the support and guidance all of these industry leaders have provided to me over the last 4 decades. Now, my tenure on the sell side has come with both the thrill of victory and the agony of defeat. Lehman's legendary annual Global Relative Value Roadshow frequently culminated with a poolside cabana party at the Beverly Hills Hilton. And I will admit that more than once I fell into the pool afterwards. During my very first week on the job at Barclays, I was dispatched for some urgent senior client development initiatives at the American Club in Kohler, Wisconsin, and then on to Pebble Beach, back to back. I kind of thought I'd died and gone to heaven. And when I came to BNP Paribas, I was very quickly coached that golf was out and tennis was in. If you haven't been to one of our conferences at Indian Wells or at the French Open, well, you just got to work on one of those invitations because these are spectacular events. But glamour aside, my success would have been very short-lived, like a New York football season. Without fantastic colleagues and team members, they were the ones that helped me meet unrelenting publishing deadlines, Rick Reeder call deadlines, prepared roadshow decks and conference presentations, hunted for pricing anomalies, and chased down my cockamamie hunches. In a nutshell, dozens of colleagues over the years have contributed mightily to my professional success, and for that, I'm incredibly grateful. Just 2 worked with me very closely at all 3 firms, Robert McCady and Melody Vogelman, and I'm most pleased that Melody could join our table tonight. But as Melody frequently reminded me, I'd be nothing without an incredible family and the support of fantastic friends. 40 years on from graduation from the little college that could, my loyal band of Colby brothers and sisters has been kind of the most reliable source of grounding and camaraderie while distracting me from the daily perils of Wall Street. My wife Marion has been central to my good fortune for nearly 30 years, evaluating career moves, guiding on key speeches, and engaging with priority colleagues. She loves to tell a story about my MD promotion dinner in 1997 when we were enjoying a kind of quiet dinner when, much to our surprise, Dick Fold took his seat at our table at Windows on the World. She walked down the aisle with me in the fall of '98, soon after LTCM and Russia had failed, and Lehman had its first brush with bankruptcy. Consequently, her glorious Greek honeymoon was heavily interrupted by weeks of BlackBerry beeps and the daily sprint for one of the Financial Times delivered at Santorini. And she stood by me when we plunked down everything we had and then some on the New York City townhouse right before the dot-com crash. What could possibly go wrong, right? When your paycheck, your restricted stock, and your entire real estate portfolio are perfectly correlated during a crashing market. And if our European honeymoon wasn't torture enough, she came to a Lehman boondoggle in the UK just a couple months after our first child was born. We both needed a break, as parents all know. But in true Howard form, the best laid plans didn't quite work out, as she landed in the UK on 9/11, yes, that 9/11. And while I was most grateful not to be in harm's way on that tragic morning, we were separated from our baby for a week at a hugely stressful and uncertain time. Once again, Marion stood tall that week and for many weeks after, as all of us displaced Lehman employees kind of struggled to adapt, and with much help from the Bloomberg organization, we had to cobble together an action plan to keep the machinery running until a proper HQ was acquired. Now, like all of you in the business, our family's seen plenty of other highs and lows due to markets, blackouts, hurricanes, crashes, layoffs, and all forms of setback. But Marion, you've been a remarkable source of guidance, counsel, support, and wisdom throughout this journey, and I'm most grateful and want you to know that I could not have done it without you. So as a researcher in my core, I couldn't resist the urge to dig in a bit and look for commonalities in background and achievement or other markers among the 60 Hall of Famers who came before me, of which many are in the back there. To my pleasant surprise, one very common theme stood out. The vast majority of those who've been recognized for their lifetime achievements in fixed income have also been very generous and intentional in giving back during their careers. Of course, this comes in many forms and flavors, but it does resonate loud and clear. Think of Mike Bloomberg and his charitable foundation, Michael Milken and all he's done for prostate cancer and melanoma research, or my longtime colleague Rick Reeder with Emory University, the North Star Academy, and the Hospital for Special Surgery. Their dedication to these worthy causes is remarkable, but hardly unusual. In this room today I see Joyce Chang, who's been so dedicated to Trickle Up, Girls Inc., and so many other organizations. Barbara Novick, who served on the board of Cornell University and 100 Women in Finance, among other groups. And notably, you see the same attributes in tonight's other honorees. Greg has already mentioned how much time and effort he's dedicated to CHOP, the Children's Hospital, where he's now board chair. Sharmin, who somehow finds time to be a leader for New York Presbyterian Hospital, the Trinity School, and research centers at both Harvard and Princeton. How can that be? And Greg Peters, who boggles the mind. He participates in leading forums around the world, such as the U.S. Treasury Borrowing Advisory Committee, Chatham House, and still makes it a top priority to raise awareness and resources for the New York youth education group, Link Education Partners. So there you have it, an important common theme across the elite of our industry is quite evident. This cohort of fixed income Hall of Famers have not only achieved greatness in their day jobs, but they have also prioritized paying it forward via passion projects, worthy institutions that help the next generation, those less fortunate, or the community at large. Now, reflecting more deeply on this, which is what an analyst does, I've come to appreciate a powerful circularity at play with those who have prioritized giving back during their professional careers. Now, could it be that their mental health has benefited, offsetting much of the stress in this line of work? Perhaps joining the right not-for-profit boards expands one's professional networks and perspectives, helping market participants grow their platforms and make better investment decisions. And maybe the real-world issues faced by universities, hospitals, laboratories, and foundations can serve as useful data points to help leaders direct their firms or invest smartly in others. This has certainly been my experience since my job was eliminated in 2009, an inflection point when I started to look beyond Wall Street. I've learned and benefited so much by volunteering my time and expertise for FIASI, educational institutions, foundations, and other worthy organizations. My review of those in the Hall of Fame before me has been an affirming revelation and something that hopefully others in the room will benefit from in the future. Another reflection I'd like to share relates to mentoring and advocacy for deserving junior talent. A future star is a future star, whether or not they work for you or in your immediate area. We operate in a surprisingly small community, and time spent helping someone build their essential skills, navigate their career decisions, and achieve professional goals can also generate sizable circular benefits. In the room today are people I worked with closely 5, 10, 20, and 30 years ago, and they are now important clients and counterparties of my firm. I learned a great deal from them in the moment and in the years that have passed as well. Win-wins like this are not bountiful on Wall Street, so I encourage others to be intentional about finding suitable mentees. It is well worth the effort. I'd like to wrap up with one deep thought to ponder. People said, Mark, you're a strategist, you're an analyst, give us some red meat to chew on. So I'm going to give you a little red meat to chew on. This may not play out for another 1 to 3 years, not in the near term. So think about it with that frame of mind. So as we all know, longstanding norms are being challenged all around us. The headlines are too numerous to list. It causes my head to spin. The changes at the DOJ, at the Federal Reserve, election gerrymandering, international trade and diplomacy uprooted, denial of science, suppression of journalists. These are rather dramatic changes when you take them in aggregate. And they are not unique to the US or due to just one administration. So what might be some of the consequences of this confluence over the next 2 to 3 years? And importantly, how might these important changes intersect with some other big changes afoot? AI's advances, the steady marches of demographic change, voter populism, climate change, and rising developed market debt burdens. These last 5 factors appear to be driven by the laws of physics for the foreseeable future. These bodies in motion are going to stay in motion. And if they stay in motion, I could foresee a collision of sorts on the horizon, especially if economic conditions falter. And what really fascinates me when I think about that scenario and that potential collision is that first principles point to contract law as the bedrock of fixed income. But recently, we've observed a notable rise in lender-on-lender conflict. Some even call it violence. We've also observed late cycle evidence of corporate fraud and related malfeasance. This has been most common in leveraged finance, but is creeping into the investment grade space. And on Bloomberg today, you may have seen there was a long article on fast moves taken to strip the Palisades Center Mall in Nyack out from under CMBS bondholders. And a new Federal Reserve Board member has hinted at encouraging U.S. government bondholders to extend their maturities. So I invite bond market pros in the room to pay attention to changing norms with regard to the rule of law and the evolving technology and techniques that may allow parties with disparate interests to advance unconventional agendas, potentially to the detriment of creditors. Now, there's a silver lining in this Debbie Downer I just shared, and that is that I'm bullish on my profession, as I believe it will be a robust environment for smart sovereign credit, structured finance analysts and PMs, especially those with legal skills. Now, in conclusion, I've tried to convey a little more than what I did and what I've learned over nearly 40 years in markets. My words have been intended to showcase the people that supported and enabled me and about the legacy I hope to leave. I'm most grateful to them. Wall Street's tough. It can be brutal in markets and banking, but at its core, it has been and remains a people business. So I'll offer 5 lessons learned from my experience. First, I'm going to quote the great Derek Jeter from his Hall of Fame speech. I cheated. This is a game that requires sacrifice, dedication, discipline, and focus. Number 2, follow what excites and incents you. In my case, that was predicting security and market prices and working closely with smart clients. Number 3, pick your people and employers with intention. Number 4, invest in those who share your values and have great potential. And 5th, leverage your skills, perspectives, and network to support worthy organizations and preparing the next generation to adapt to whatever comes their way. Mentoring can pay big professional and personal dividends. I and many others have found this helps one to make a positive impact that endures. Thank you very much. That wasn't vodka, don't worry.
It's okay if it was.
Good. Thank you, sir.
I'd like to introduce our next honoree, Sharmin Mossavar-Rahmani, who graduated from both Princeton and Stanford and still couldn't really find the job she wanted when she got out. She wanted to be an engineer in the energy space and couldn't find any jobs. Instead, she ended up doing fixed income at a small brokerage, and she never looked back. She was working on fixed income and was so good at her job that she got all these big clients, and she outgrew the firm, let's just put it that way. She moved to Fidelity, where she was chief investment officer for fixed income, and then joined Goldman Sachs as a partner in 1993, the first woman to ever do so at a time when not many people at all, regardless of gender, were joining that firm as a partner. In her more than 30 years at Goldman, Sharmin has risen to chief investment officer and head of the investment strategy group at the Asset and Wealth Management Unit. Sharmin encourages non-political, unemotional, and thorough analysis, reading all sorts of different news outlets, often hard copies, to suss out any new ideas or perspectives. One of her fellow coworkers recently told her, "I never knew anyone who enjoyed running into a burning building as much as Sharmin." She does serve on a ton of boards. I'll just mention some of them. The New York Presbyterian Hospital. She also sits on boards and is active with Harvard's Kennedy School of Government and Princeton Centers for Iran and Persian Gulf Studies, as well as the Griswold Center for Economic Policy Studies. She's published 2 books, one on bond indexing and one on OPEC natural gas. She's done a whole host of other things as well. Please welcome Sharmin to the stage.
Thank you, Lisa. Of course, with that great introduction, so comprehensive, I think I don't have much to say. And in any case, Mark Howard took all my time. Obviously, I'm incredibly honored to be inducted into this Hall of Fame. But I must confess, when Mark Howard nominated me actually originally a few years ago, and then again this time, I was a little bit surprised, because if you look at the list of former members of this Hall of Fame, I sort of thought, I'm not sure I quite fit in. If I think of Bill Sharp, unlike Bill Sharp, there's no ratio named after me, right? Unlike Michael Bloomberg, there are not hundreds of thousands of terminals named after me all over the world. I think of former Fisher Black, our former partner, the late Fisher Black. There's no complicated option pricing model named after me. And then, of course, I think of the first inductee to the Hall of Fame, Marty Leibowitz, who literally launched all the analytical rigor and all the kind of research that people have now improved upon in fixed income. I don't know how many of you know this expression, I would not be here if they were not there. It's an expression that comes from a Middle Eastern gentleman who's a professor at Columbia University, and he wrote a book on Orientalism, and this quote is there. And when I think of my career, I think of all the incredible people I've worked with who have helped me learn so much and who have actually made me look so great. So I'm incredibly grateful for that. As Lisa mentioned, I joined Goldman Sachs in 1993. At that time, money markets was the biggest business. It was a tiny, tiny firm. We had only started the asset management group a few years ago. It was like 4 years before I joined. And it was very small, and money markets generated all the cash flow that we then were going to reinvest and build fixed income and build equities. And there was a lot of pressure at that time, in 1993, to increase the yield of these money market funds. So what would people do? You all know, increase the duration a little bit, increase the sort of the credit extension, maybe go a little bit down in credit quality. There were still rules there. But Casey Uniacke, my colleague who headed up money markets and is sitting right there, resisted all the pressure. And obviously, you all know people in sales put a lot of pressure to try to boost asset growth. And lo and behold, 1994 comes along, big blow up in bonds, and so quite a few money market funds, you might remember, actually blew up. And we were totally unscathed. And while Casey did all the heavy lifting, I ended up getting all the credit for not blowing up. So after money markets, we wanted to expand our fixed income business, and it was just in mortgages, and we wanted to do more. And so we had to figure out how were we going to beat this difficult index, the Lehman aggregate index at the time. And my colleagues, Mark Van Wyck and James McCarthy, literally worked on eking basis points out just to beat that index. And it's so funny, I was telling this to my son this morning when we were driving down, and he said, Mom, that's why I don't like the fixed income business. Like, okay, thank you. That's okay. Then we decided we're going to expand into emerging markets, and emerging market local and dollar-denominated debt. And Mike Brandmeier, who's here as well, took on that responsibility. And he literally risked life and limb to build that business. So what do I mean by that? You may remember that in 1998, there was a big revolution in Indonesia. There was incredible violence, and actually about 1,000 people were killed. Now, Indonesia, you may know, is one of the most corrupt countries in the world. Like, the World Bank ranks them. At that time, they were about 22nd percentile from the bottom. So incredibly corrupt, and we own some short duration bonds from 2 Indonesian institutions. And we were worried because our bonds were maturing in just a few months. And so Michael flies over to Jakarta just as everything is blowing up. Airports are closed, fire everywhere, and he's trying to get back, make sure our bonds are paid. And there was enough cash in those companies, but the companies, the owners actually absconded with the money. I was actually thinking, Mike, you should join this group that is giving all that money to Argentina, right? That we're never going to see that money back. I was just thinking that makes so much sense. So obviously, it did hurt our performance, but at least our clients knew we made huge sacrifices to do the best we could actually to bring those assets back. I've also had the great privilege of working with my colleagues for decades. So people talked about being married, for example, for 33 years and all those great things. I'm married for 43 years. That's why my husband's not here. He had zero interest in attending, but that's a different matter. I noticed the men clapped more than the women on that one. Okay. That's okay. But my colleague Chris Bloom and his wife are also here, and we have worked together closely for basically 33 years. It's really quite incredible. Initially in fixed income, and now we work together in outsourced CIO business. And he was responsible for doing a lot of initial work on performance attribution in the fixed income markets, and really set the standard in our asset management group for what to do in that space. Since then, I transitioned into multi-asset portfolio management, and I owe that really to 2 people. Cliff Asness, I don't know how many people here know Cliff Asness, but he was the founder of AQR. He used to sit right beside us doing mortgage-backed securities, and then he did various systematic strategies. And Britt Harris, again, I don't know how many people know that name, but he was responsible for the pension plan at GTE, then Verizon, then he went to a large pension plan in Texas, and then UTIMCO. So pretty well known, but he set the strategic partnerships that became the foundation of all this outsourced CIO business. And we were one of the first firms to be hired for that. And Cliff Asness's various systematic strategies were just phenomenal, and we were the #1 performer. We did better at the time, better than JP Morgan, better than Morgan Stanley, better than GMO, and it was really his strategies. So we looked good again because of all his credit. So obviously, when I think about my career, I think of all these people from whom I've learned so much, and again, who've done so much to make me be up here. They've been incredibly, when I think of them, incredibly smart, analytically rigorous across whatever field it might be, intellectually curious, very team-oriented, and very high integrity. So when I think of what people around me have done and people I try to mentor, that's always a very, very important factor. Again, as I said earlier, I would not be here if they were not there. So with that, I'd like to thank all of you again for being here. That's such a pleasure. Mark, thank you. And you do have to tell me why you nominated me. I'm still very curious. And thanks to all my colleagues and my son, who works with Mike Brandmeier, actually. See, I wouldn't know. He told me to come back up again.
It takes a village.
Thank you. Thank you. Thank you very much.
I love the digs. Perform better than JP Morgan and Morgan Stanley. Who can come up and rebut that? All right, our next guest. Thank you so much, Sharmin. Our next guest was born in Kearney, New Jersey, Greg Peters. He started his career in fixed income also by accident. After graduating college, spending a year in Europe and working at a surf club on the Jersey Shore, his father suggested gently that he should get a real job. His father even found the job listing that led to the start of his career. Greg joined OTS, where I believe he met his wife, the Office of Thrift Supervision, before moving to Solomon Smith Barney, where he began his journey in credit research, albeit reluctantly. He thought that they were kind of the low on the totem pole kind of group, but he realized that actually that was the most important place. He went on to serve as global director of Morgan Stanley's fixed income and economic research, where his discipline and expertise gave him an upper hand during the financial crisis. It's amazing how much the financial crisis shaped an entire generation of investors. Greg has come full circle, moving back to New Jersey as co-chief investment officer at PGIM Fixed Income, where he's been since 2014. He is a member of the Chatham House, the Institute of International and European Affairs, Fixed Income Analyst Society, and the Bretton Woods Committee. And he does serve as a board member for Link Educational Partners, a nonprofit organization dedicated to educational excellence for youth in Newark and the surrounding area where his family is from. Greg, please come on up.
All right. I have the coveted graveyard shift. I tell you what I won't do. I will not start my talk with, I'll be brief. Because as any kind of economist, Nathan, strategist knows, that's the death knell. If you say, I'll be brief, you go on and on. So I'll try to actually be brief so I won't say it. Lisa touched on most of it, so I really don't have much to say, and it's been a very difficult bunch of acts to follow, so I am quite humbled to be up here, truly. But just, indulge me in some self-indulgence, if you would. Honestly, I never really thought I would be up here, and I know everyone says it, but I really believe it. Being in the exciting world of fixed income has just been a real gift. And if I said that to the equity crowd, they would think I'm being sarcastic, but I really mean it. I think fixed income has been just a marvelous place to spend a career. But when I look back on that career, I really realized two things. One, as Lisa mentioned, father may know best. And then two, fate has been crucial. I look back and quite candidly, most of the active decision-making has been made for me. And so fate has been a real important part of, my career and my life, quite candidly. So going back in the time machine, when I was little, John Corns here, who I grew up with, he'll remember, I was basically, tall, skinny, with big buck teeth, who had a pretty significant speech impediment, who also suffered from hyperactivity. So I was not set up for success. So be kind, I was a late bloomer. So things really took time to develop for me. So I did wind up at university, started doing quite well, got my act together, but then I wanted to find myself, as Lisa mentioned, so I did bartend. Then I traveled through Europe, find myself, self-reflection, self-enlightenment. Never really came, by the way. I'm still searching for it. And then I wind up home, and as Lisa mentioned, my dad, after I got up around, just call it, noonish, there was an ad cut out in the newspaper, the paper one, on the refrigerator, and that was like a not too subtle hint that I need to kind of get my act together. So I wound up with that job that was with the government, the Office of Thrift Supervision, which was, to help out with the savings and loans crisis. But the funny part about that story is that my wife Jody, her father read the same newspaper, same ad, cut it out, and got the same job. So, that's kismet, as we say, or she likes to say. It was just a tremendous experience, honestly. As a 22-year-old kid, I had more responsibility than I do now. It's really true, But what happens invariably, and this time, of course, is that, the government overregulates, and so being in that industry was really boring, right? And so it was time for me to get another job, and so I moved to the sell side. So I wound up at, Solomon Smith Barney. And so I moved into the mortgage area, mortgage trading area, kind of like king of the roost, at least in my mind. And then there was a merger, and then I lost my job. And so I moved out of mortgages. I was actually fired, but then Dan Lancelotti really fought for me, and the consolation prize was moving to research. And I have to tell you, I was super bummed. So I am predisposed to melancholy and depression, for those who know me. So it was a difficult time for me. And then I had a mentor, Jim O'Brien, who's here tonight at the table, and his words when I was trying to figure out what I wanted to do with my career, he goes, "Whatever you do, don't do research." Those are the guys who keep the extra shirts in the drawer, work all night, and they get paid like crap. So here I'm in research with the extra shirt in the drawer, and there you have it. And so before I realized that it was just the perfect and best job for me, I was slated to move to a home builder, Hovnanian, to be the treasurer. And then I had to do this psychological exam, and I failed it. So I stayed. For those who know me, you shouldn't be surprised that I failed that exam, by the way. There's a lot of informational content in that snippet. But what I loved about research versus trading as an example is that it allowed you to zoom out, see the entire playing field, put the component pieces together. It really fit my personality. It fit my personality having to, not deal with people, sit in a cubicle, just work on my kind of computer. But it really was, the best thing for me. Until, of course, where you're forced to public speak, and then all my anxiety around stuttering and stammering really, came rear its head. But, there's a lesson there, too, which is oftentimes when you have no choice, you have to do it, right? And that really what happened. So from that point, I got a phone call from, once again, Jim O'Brien, who called me about, wait for it, a research job working with Steve Zamsky at Morgan Stanley. And Jim, I think you forgot that you ever gave me that advice, by the way. I did not, and so I moved to Morgan Stanley, and it was the absolute best experience I could ever imagine, honestly. It was just fantastic. It was intellectually stimulating in ways that, it was just really, really mind expanding. I had distinct pleasure of working with so many great people. I had to write them down, from Barton Biggs, Byron Ween, Steve Roach, Steve Galbraith, Marty Leibowitz, who is the OG, by the way. The late Shivan Mahadevan, Vishy Tarupator, Ryan Marshall, Riz Hussain, the list really goes on and on. It was such a fantastic group of people and left such an indelible mark, on my life, honestly. And I'm really proud of the research that we did. Yes, the research matters, kind of. We developed the first LBO screen at the time. Thank you, Riz. We published structured product and credit derivative handbooks that were quite popular at the time. The GFC, yes, Lisa, it's always back to the GFC. From the Vishy's favorite of who put the L in LBO to this inverted pyramid concept. I was also almost fired by Zoe Cruz for publishing a report, Change of Rules, Chain of Fools, when the autos were downgraded and the rating agencies didn't like the tone that I took in my paper. But I'm also not ashamed to say what I loved about it were the cartoons. So, we were on the Vanguard to bring cartoons to the masses from a research perspective. I'm not sure that's something I want on my epitaph, but nonetheless, really proud of that, even though I didn't even script them. I just liked the idea that we were doing it. So I really felt our research was irreverent, relevant, and thought-provoking, and really quite proud of it. But I got tired of the sell side, honestly, and then I left. The truth is I fired myself, which was nice, before Steve Penwell did it for me. And I was really trying to figure out my next steps, and I landed at PGIM/Prudential. And it is such a special place to work, the people, and Newark, New Jersey, for those who've been, is a really special place for me personally. So you see, my dad, the one who cut the ad out of the newspaper, grew up in Newark. My grandmothers, both of them, cleaned office buildings at Prudential. My family would shop at Hanes, which is the department store in Newark that's now a Whole Foods, for Christmas. And my aunt and uncles would have dates at this dive pub right behind our building, McGovern's. So it's a really special place for me, and that connection, coupled with the connection of the people that I work with and at the table over there, has just made this a truly special moment for me. So I joined PGIM from the sell side, from research into portfolio management, and I had no idea what I was doing, of course, and it was the support of the team from Mike Lillard, Craig Dooling, Rich Piccarillo, John Vibert, the whole lot, just so supportive. I never would have been able to kind of move forward. So fate brought me to PGIM, and I'm really glad that it did. So I'll leave you with kind of 3 life axioms. One is less is more. Kind of its kissing cousin is brevity is the soul of wit. The second is it's not where you start, it's where you finish. And then third, you learn more by listening than talking. So with that, I will stop talking, and thanks for indulging me.
Thank you all. I'm just going to quickly thank the board of FIASI, thank Lauren, who is up here. She makes all of this happen. She does a fabulous job. She deserves a round of applause, honestly. And thank you, the nominating committee, Steve Berkeley, Aaron Lyons, Monica Agarwal, and Chris Goodkind. And thank you all for coming. I hope you had a fabulous time.